and the company was 3 people, and it it was pretty much a fiasco.
Welcome back, investor, to another episode of the Passive Income Adventures, where we teach you how to take more adventures, both how to pay for them and how to find the time to do it. Our guest today is Mark Ritter. He is a real estate lender who's going to walk us through. I know when I first started talking about real estate lending, people start to get their eyes glazed over, Mark, a little bit. But tell us a little bit about how you are going to help us today figuring out how to get more passive income adventures by leverage.
Sure. My name is Mark Ritter, and I'm the CEO of Member Business Financial Services, but we just call it MBFS because Member Business Financial Services is quite a mouthful. Yeah, and we're owned and operated by credit unions. So, hoping to share my personal story and a little bit about our journeys and what we do to help people across this country with their personal and business financing to meld it all together through credit unions.
Yeah, it's a powerful tool. I think most people overlook a little bit when they're looking at investing options is that real estate businesses and maybe margins in the stock market are some of the only things that you can get leverage on to be able to go and use somebody else's money to go make money for yourself. When you hear other people's money in real estate, we often are thinking about our investors are passive investors, but we're often not thinking that the bank is going to finance usually at least half up to three quarters, maybe even more of the project that we're investing in. And one of the few ways that you can put so little cash in because it's such a great investment vehicle that there are others who want to put their money into, whether they're lenders or equity partners. So can you tell us a little bit about, I guess, start up with yourself. Give us a little bit of your history, your story, your background. You said you're calling in from the mountains of Pennsylvania. Honestly, when you said that, I didn't even know Pennsylvania had mountains. So you're out in rural Pennsylvania, but you just recently made that shift. And walk us through your career, your successes and failures, and then how you're starting to pivot now into your own kind of a second phase of life as you've been hitting some business success and rethinking a little bit about why am I doing this and where am I going?
Yeah, sure. My name is Mark Ritter, and I was born and raised in the coal regions of Pennsylvania. It's about as blue collar as it gets with where we are at. If you've ever seen the 80s movie, All the Right Moves, that was pretty well. What I did is I went to Penn State for a business major. And then I just wanted to, like many kids who grew up in the coal regions, you just want to get the heck out of town.
Yeah.
So I actually was in Tennessee for just a couple years, but I was working for a company that moved me back. And I got into the financial services world and some banking worlds and those different sort of first jobs, but really a liking to the banking and financial services arena. And then I got working for a company where we really were digging into the commercial lending side. And then 9/11 hit and it pretty well almost wiped the company out. So I was looking for that next thing to do in life. And I always really liked community banking. I like personal banking. My background wasn't the Wall Street guy and big cities and doing all those things. I always liked talking with people. I liked personal communications and more of that community setting. And when I was younger, my dad always talked about credit unions. He was a union electrician in the local factory, and he always said that the credit unions were there. And it was at a time they actually were starting to change the laws. They changed the law a couple years ago, which allowed credit unions to get into commercial lending, business banking, doing all of that close to 23 years or so ago, that's when my credit union adventures started, and they hired me, and I think if they really knew what they were doing, they probably wouldn't have hired me. So I started at a large credit union, and they basically just sat me down at a desk and said, "We wanna do business lending, figure it out." So here I was 29 years old, and I was trying to fake my way through this job, trying to learn everything there was to know because I knew the lending and financial side, but, you know, business lending, real estate lending is such a massive world, can't know everything. So I figured it out that I've always had that entrepreneurial spirit in me and figured out what to do and how to do it. So from there, I was there about 10 years and we really built it up from 0 to one of the top 10 in the country among credit union lenders. And one of the things that I really like about credit unions is that they are not only financial cooperatives, but they cooperate among each other. They're
Mhm.
very good at sharing, and I started working with a lot of other credit unions and helping each other out, and really, I became to enjoy working with other credit unions as much as my day job of helping out our local businesses and real estate investors. So about 13 years or so ago, became the CEO of a company, MBFS, which is called a CUSO, which stands for Credit Union Service Organization. Now, this is quite the adventure because when I started up as the CEO, I was the fifth CEO in 5 years, and the company was three people, and it, it was pretty much a fiasco. I knew that, but I knew the potential. Fast forward to today, we are a company of about 55 people. We outsource most of our back office operations. And I was down in the headquarters of Philadelphia, in Bucks County to be exact, which is stereotypical suburban county. Then my wife was a pharmacist, and I really enjoy my job. And we virtualized the company. Probably about 75% of our company was virtual from about 2018 on. So when my youngest graduated high school, what's really become important to me is lifestyle as much as anything for the future, as much as the job. So my wife and I sold our house, and I am now a remote CEO that lives in about as country can get. I am in Sullivan County, Pennsylvania, which I'll send a prize to anybody listening to this who has actually heard of Sullivan County, Pennsylvania. So we're a county of 5,800 people, and I usually get up in the morning and go hiking or fishing, and then have my work day, and then wrap it up with we do have a local golf course I hit up, but it is a very quiet life. I love the weather. I love the lack of stress in my life compared to sitting in traffic and getting screamed at and all those things the city suburban life gives you. Along with the lower cost of living, there's some upside, there's some downside. But yeah, I'm a remote CEO, and currently we work with over 100 credit unions and really just support them on their journey for a lifestyle more than anything. I always tell people nobody wants to just own real estate to own real estate. It's more about what that reward gets you in your lifestyle.
Yeah, definitely. I hear you there because I often tell people, like, if you wanna be a real estate investor, you actually have to like buildings and the people who live and work in them, or if you're just in it for the money, then it's not really gonna be successful, but honestly, it's so difficult and it's so expensive, to own and operate real estate that if you're not in it for the money, it will eat you alive, and so it's this balance between passion for the product itself and just the pragmatism of saying, "This needs to be hugely rewarding for the amount of stress and risk it causes."
Well, I could use myself as that perfect example. And I have many horror stories of people that we've worked with where everybody wants that passive income level. Everybody wants a nice, if you keep your day jobs, you can supplement that. And eventually you have those financial goals. But really, what you have is lifestyle goals of what you're looking for.
Mhm.
But me personally, I can barely change a light bulb. I'm really good with the numbers, and if anything goes on around your house, I'm calling somebody to fix it and help
Yes.
me out. And when you owning real estate is owning a business,
Mhm.
you have to manage that business, and whether you think it's quote passive, you really need to consider how much time it actually takes because there are ways to outsource everything and it makes your life much easier, but that costs money and it's a little bit of returns. But if you think you can just rent a property and collect a check every month and you never hear from anybody again, that's a perfect dream. But eventually things break, things have maintenance, you have issues you have to deal with, you have tenants that aren't perfect, and it takes time and resources. And when something breaks in the middle of the night, they're calling you. So that's that piece that we have and why I really enjoy the credit union relationship is we can have that conversation with you to talk about your goals and journeys and making sure that it's successful.
Yeah. And when we were talking earlier about using other people's money, it's not just the banks and credit unions' money we're using, it's about our investors too. And it's important for everybody to think about how they want to spend their time. Like you said, that lifestyle design, figure out the down payment portion and sometimes some of the operating or capital expenditures that are going to be put in. That's coming from usually on smaller buildings, private individual. And so we may have down payment partners, capital investors, or joint venture partners, and just figuring out where everybody fits into that and we talk a lot about diversification on this show. And one of the ways that we talk about diversification that a lot of people don't really think about as diversification is time diversification, how we're spending our time. I have some buildings that I active managely. I have some that I actually self manage without a property management company. I have some that I manage with a property management company as managing partner. I have somewhere I'm a minor joint venture partner, and I have somewhere I'm 100% passive. Like I just did my due diligence up front, I put my money in, and I have actually no material involvement in the business at all. And so being able to spread out the way that I spend my time allowed me to really focus in on my strengths and on my niche and really control how I'm spending my time doing something that I enjoy doing versus trying to do everything myself and always be either 100% active or even 100% passive. Our best passive investors are often people that have some real estate experience and they understand the game. And so they're outsourcing everything, like you said, but they have done some of it themselves. So they really know what they're looking for and they can manage that outsource without having to do it themselves. But to think that you're just going to jump into an industry you know nothing about and be able to outsource everything because you're going to find all these trustworthy people who are going to do things while you're a complete idiot at the helm is just it's just unrealistic in my opinion. And that's not what you're getting at when you're having conversations with people about their own financial planning, but you're not a financial planner. So what does that look like as a lender?
So we really the first transaction as when the first deal you put together with somebody is always the hardest.
Mhm.
And why that is, sometimes people get frustrated, but when you talk about investors, a credit union is lending out other people's money who's in the co-op. So we're the stewards of that money and want to make responsible decisions in that. And we're federally regulated institutions. So we also have to deal with them a little bit too. But more importantly, we are the stewards of this money and we want to make sure it's responsible because nobody wants to be in a situation where they're borrowing money and things go sideways.
Mhm.
So that conversation usually comes in the longs of tell me about what you're doing. Tell me about this transaction, but also tell me about the plans, the goals, and where you want to be on a long-term basis. Because for us, that's as much, if not more important than just this particular transaction because we credit unions are relationship-based institutions. We want to know about your personal business. We want to know about your family. We want to know about your long-term plan. But the dirty secret is really what we want to find out is about this transaction and can you manage your business in the future and what are your plans to manage that business in the future? If one property is good for you, buying 20 properties that same year might not be good for you because it can get out of hands very quickly unless you have the experience and knowledge to do that, or if you have the right team in place to get it done. So, what you talked about in terms of different types of investments is with regards to time. I just went through that phase of life where I have one recent college graduate and I have one teenager. And when my kids were 10 and 14 years old, there wasn't a lot of time there. So, you have to be able to understand your time commitments and time energies, and we can understand it as well. So, you can grow in a responsible manner that makes sense for you, your lifestyle now, and where you're going in the future, and successfully managing the real estate investments, no matter what that role may be.
Yes. And I have a long history personally with credit unions, and we've always checked the credit union first. My dad actually he worked for both Motorola and Boeing. So I grew up with Boeing Employees Credit Union. My family still banks after my dad retired and even passed away. My husband worked for Motorola briefly as well. So we're Motorola Employees Credit Union. I think it's now True West when we relocated to Salt Lake City. And we just started getting memberships basically everywhere because we were looking to establish our personal credit by increasing our access to lines of credit. And so we would just enroll everywhere and start applying, basically building our relationship with those credit unions. We are at Federal Credit Union now, Mountain America First, places where we do business. And one thing that we learned about credit unions is that they just seem to be a little bit more dialed into the people side of what we're doing with our credit union in Texas. When we bought a house, and this is a house that started everything, the whole business, right? And we were able to remodel that house, force a lot of value into it. It's been about 2 years, really, between doing the work ourselves and hiring contractors. That line of credit at our credit union carried us through because we would pay our labor through the line of credit, and then we would pay for all of our supplies and materials on our Home Depot and Lowe's credit cards. And so we were able to get that done with a combination of cash, lines of credit, and credit cards. And when we went in to go refinance it, we were signing all the documents, and we're just chit-chatting with the loan officer, and I don't think I fully understood at that point that we were not getting another mortgage. They'd actually found us a better product, and I'm looking back, like, why I had never even thought about doing this until they suggested it, but I was like, "Are we gonna have more documents, or was there anything else to sign?" And they're like, "No, you guys are done, you can head out." And I said, "Usually the mortgages are, like, 18 inches thick." And she said, "No, this is the home equity loan. Your house equity, you could basically get an 80% or something like that on the value of your home, and we're using that home equity loan to pay off your mortgage that we're holding with the same credit union and the line of credit. And so now you guys just have this 20-year home equity loan that's a much lower interest rate. Your payment actually hasn't changed even though you borrowed more money, and that's a great product." And we went on our merry way, and we thought, "Okay, this has been one of the best financial decisions that we had ever made in our lives." Because working with a credit union, they were able to hook us up with a great product that was really a fit. But a lot of people don't realize that you can also use credit union for commercial loans because we have a 20 unit apartment building in Idaho that we financed with a Utah Community Credit Union because they had a great loan product and they were willing to go up and do commercial lending. I didn't even know that credit unions did commercial lending. So you can tell us a little bit more about what makes a credit union different than a bank, technically, and also on the personal side,
Yeah.
and what the loans you all do that maybe our audience doesn't even realize we can get through credit unions.
Yep. And as I mentioned, this is why I enjoy going on this because there's nearly 160 million people in America who belong to a credit union.
Mhm. Ha.
And where better to get access and have that relationship with, particularly when you're starting out, than where you have that personal relationship with, where you like them, they like you, and you can show your history. But to roll back, what a credit union is, when you drive by, you see a drive-through ATMs, they have signs for car loans, they have signs for mortgages, and it looks like a bank, and my money spends the same as everybody else's money. But what it really is, a financial cooperative. It's much like any other cooperative business. It's owned by the membership for the members of the organization. The goal isn't to grow the business and make as much money as possible and sell it off and go off on vacation homes or maybe start up another bank. The goal is to run it for the benefits of the people who have accounts there.
Mhm.
And back in the old days, you would see a lot of Motorola Employees Credit Union, Blank Factory Credit Union, the local teachers credit unions. There are still credit unions that are very tight field of memberships out there today to go in and join it. But most of them are cooperatives that are much more open
Yeah.
to large groups of people. So the first myth is out there, I don't have access to a credit union, which if you're driving by a credit union in your community, there's probably about a 95% chance you could go in and open up an account at that credit union and get access to it. But the organization is really run and overseen by a board of directors who are managed by the account members. It's just a straight democratic election every year. every member gets one vote on who gets to be on the board of directors. When we talk about the holiday season, when you talk about buy local, that's really what I think a credit union is. It's an organization that buys local. It keeps the local deposit. It keeps the cycle of money going in the credit unions. And there are the smallest of the small credit unions out there that are really focused on some disadvantaged areas. And then
Mhm.
there's big credit unions out there that lend nationwide and are open to everybody and can go after the largest commercial real estate deals you can imagine, along with helping everybody. And there's everything in between. So it's not just a homogenous industry. I would say it's homogenous from the value standpoint. And for anybody who's ever had their bank merged, usually every time your bank gets merged, you move down the pecking order one rung. And at a credit union, because we don't have that pressure hanging over us of we're going to be merged, we have to meet this earnings per share. It's a much friendlier organization in that you can have a conversation, and people are looking to do what's best for you and not just what's best for the bottom line and profitability. And I
Mhm.
think you experience the same thing when people look to put you in the best product that they could, rather than some lenders and hard money lenders. It's the old, when you're a hammer, everything looks like a nail. So really, what we pride ourselves on bringing that friendly culture to investors. Now, when your father had the credit union that he opened 50, 60 years ago, credit unions at the time were very much more credit unions were originally founded for local business communities and farmers. And over time, they became much more employer grouped focus basis. And like I said, then a law changed where the Federal Credit Union Act changed that allowed credit unions to uh, join into commercial lending, small business lending, real estate investments. And the main reason was just community banks drying up. So I like to think that credit unions have really taken that community bank role of I know you, let's talk, let's have a relationship of 25 to 30 years ago, and filling that role of the local lender with local deposits. And yes, there are some nice community banks out there today, but there's much, much less of them. And that's why you see the growth of the credit union
Mhm.
for that purpose. And even today, people don't consider, they may have their credit union account for so many years. They don't think, oh, this is where I'm going to shop at for my real estate investment needs as they move on.
Yeah, and I know with America First Credit Union, it's one of the only credit unions that we found that would do a HELOC on a rental property. Because 'cause you'll hear this a lot of times. Here's another misconception. I'll be sitting at real estate clubs, they'll be talking about putting a HELOC on a residential home, and they'll say, "Oh, you can't do it on a rental." And I'm like, "Well, do a little research because I Pentagon Federal Credit Union is another one that I've never been in the military. Nobody in my family other than my grandpa has been in the military, so we didn't qualify for some of the military ones are like USAA insured, things like that. But on Pentagon Federal, all I had to do was make like $10, $20
Yep.
donations to a military organization. And they let me in because now I'm a military fan. I know they're
Yes.
very inclusive. And they have some of the best HELOC products I've ever seen from a bank or a credit union. And when I first picked up with Pentagon Federal, it was a fantastic opportunity because we were able to put HELOCs on several of our rental properties and start using one on our personal home and then one on our rental. And we're able to start using those as the sweep accounts to be able to run our cash through that and actually help us to pay off our mortgages faster and then borrow back out and go buy another property. So that was a really good fit for us. And I think the thing people just don't understand that you can use credit unions in that way.
One piece that many real estate investors do not understand when they borrow money and putting together a deal is, where is your money actually coming from? And many times when you go to mortgage broker, mortgage lender, or sometimes like your lender is borrowing money to lend to you and then they're passing it along. Whereas the credit union, if you look at their balance sheet, they're not going out and borrowing Wall Street money or some wholesale investor to then lend to you and mark it up, which costs a lot more money. They're actually lending their money and their deposit. Credit unions today, of every dollar of deposits, they put about 82 cents out in loans.
Mhm.
That's it. They're not lending out dollars of loans for every dollar in deposits where you have to go borrow. And then when you go out and borrow the money that you're lending to anybody else, two things. It's more expensive and it increases the cost, but also you are then beholden to those people's terms. And that's one of the reasons why people get tied up in prepayment penalty. And many, particularly newer real estate investors, you don't understand that. A federal credit union cannot charge a prepayment penalty, period.
Mhm.
So that is an advantage. Now, a couple years ago, when I was doing loans at 3.25%, nobody cared about a prepayment penalty. We were at historically low interest rates, and okay, we knew this was the bottom, and there's a lot of money out there. In today's market, when rates are going to go down, fingers crossed, and we feel pretty confident rates are gonna go down. But when rates go down, you may not have that freedom to renegotiate your loan depending on the terms that you might have just signed and not really understood because the only thing you were looking at was what type of return am I gonna get on the in what and what my expense is gonna be on the interest rate. Things like that where a credit union can be friendlier is really why people should check this out.
Yeah, definitely it our loan broker. And that's what I was surprised when we got our Utah Community Credit Union loan for our apartment building. Our loan broker actually was able to hook us up with that product. And again, this was just a few years ago. And I didn't even know that loan brokers even looked at credit unions
Yep.
as part of their basket of options between banks, private lenders, and as such. There's just a lot of misconceptions
So
out there about how these work.
so to where we fill a role in this world, we are owned by credit unions, and many credit unions are much more what I would call regional focused. If you have your credit union in Salt Lake City, many times if you have a deal in Boston, they're gonna say it's out of our area. That's
Mhm.
not us, which is fine. We're not everything to everybody for every deal nationwide at every single credit union. The world would be pretty boring if that was the place. But credit unions co-opt together to form companies like us. So what we do oftentimes is real estate investor in Utah is buying a property in Florida. We don't say, "Oh, the credit union in Utah won't lend in Florida." We have that same single point of contact shift to a credit union in Florida who's a local lender who will give you the best deal in that area because they know it and they can help you out. And oftentimes the loans are funded together and participated out on the backside to share the risk. So that is a very common practice with us to find people. Real estate investors sometimes have a much bigger lending area and deal area than the credit union. So we co opt everybody together to get the deal done.
And one other thing that I've noticed across that is that when we did our first commercial loan with a credit union, large commercial loan, there's no personal guarantee, which that's another thing that I've heard so much. If you go with a local bank or you go with a credit union, you're going to have to take a personal guarantee on that loan. And so that was one of the reasons I stayed away from it. It was like sitting in a real estate club where like you can't get a
Yeah.
HELOC of a rental property. I hear that you have to put a personal guarantee. And we've been through some where they wanted a personal guarantee, and we've been through some that they wanted to underwrite our entire global portfolio and give the entire portfolio. But if, for example, this commercial that we got, and that was on a commercial loan. I think it was like a little storefront that we wanted to buy, and they wanted to underwrite our entire portfolio, global cash flow, global DSCR. It was a rough underwriting process. But then on the other one, there's no personal guarantee. They only underwrote that deal. And so that other misconception there that credit unions are basically going to treat everything like it's a mortgage on a personal home is also just not true. I think it really just depends on the loan product that you choose to go with. and the trade-offs that you're going to make with what you have there. So can you speak a little bit about that
Yeah.
personal guarantee side of lending?
Yeah, absolutely. There are some credit unions that we work with that, hey, absolutely, we want every deal to have a personal guarantee. Then there are other credit unions that are much more flexible in that process. We'll have some people who say this is their first rodeo and you need to issue a personal guarantee. But then as you become a little bit more sophisticated, as you become a little bit more experienced, as your deals become a little bit higher quality, then you can look at and get those what we call non-recourse loans.
Mhm. Yeah. And then let's talk also about some of the short-term lending options, because that's another misconception there that we're not going to go to our credit union for a hard money loan for a flip that we need to close in 3 days. And obviously, traditional lending is not going to be a good fit for that because usually the house is pretty messed up and sometimes uninhabitable, or it just has to happen so fast it's not going to go. But that's one of the reasons we started getting our shorter-term lines of credit from various credit unions because then we were able to start pulling from those unsecured lines, and the interest rates at the time were extremely similar to what hard money was going for. They're a little bit higher now, but at the time, some of our lines of credit were even lower than hard money. And so we were able to pull some from this bank, pull some from that bank, pull some because of the shared branching system between the credit unions. We were able to go into one credit union and pull multiple chunks of cash from multiple lines of credit, go then down to the title company and buy the house. And so we were even using our lines of credit if we could as hard money instead of hard money. And so sometimes our people aren't even thinking about the short-term benefits of working with the credit union.
For the future, to get the deals done when you need to get them done. And there's nothing better than the line of credit as my dog walks out the back.
Yeah.
So there's nothing better than to have a line of credit already set, prepared. When I was working at the credit union directly, we were issuing lines of credit unsecured up to $100,000. So
Mhm.
credit unions are able to get that done. And what we really like to do is to set up lines of credit off of more stabilized properties to our real estate investors. So that way you can just pull the trigger on a deal, get it done. As you said, clean it up, get it stabilized, and then just term out that cash
Mhm.
in the future as you work out your portfolio and get it up and running. So that way we're not haggling with you over the current state of it. If it's empty, if it's in a little bit of disrepair, if it needs some TLC and managed up, if it's been underperforming. So you can, we've already given you that availability. You can just get it done, get it in, get it out, and get to what you need. The pricing has gone up on those because most of those today are tied to your
Mhm.
prime rate. And that's, in today's world, we're in an upside down world where the short term rates are actually as much or as the longer term rates. So I think over the next year or two, depending on the election and the world and any crazy world events out there, you're going to see a little bit higher rate. But typically in a normal world, those shorter term rates will be lower, and then your long term borrowings will be tighter or much higher. In today's world, it's very flat. So I think those will become more attractive as time passes and our liquidity situation in the financial services industry rights itself.
I feel like we've also had a lot of options due to it. We'll jump into some of the cons of credit unions here in a moment, but wrap up where the pros were is that we were able to go get an unsecured line of credit just because we had a good
Yep.
credit score and my husband had a W-2 job, pull those out, use those like hard money, then go back to the same credit union, get a stabilized loan on that house. I've actually never done a flip. I've always flipped them to a rental to hold for longer term. And not saying I'll never do a flip. It's just we told him as rental. So we're able to get the long-term stabilized loan through that same credit union oftentimes, and then put a HELOC on it if it's a HELOC friendly, or even a HELOC using a different credit union, and then go and pull from that HELOC, which has usually a better rate than the line of credit cured to go do another property. And so we've been able to use and reuse these over and over again. One of the things that I found on the con side is that when I first got started, I was really relying on my hard money lender to educate me about what I was doing because they had more experience they had better experience being able to evaluate the properties. When you're on an unsecured line of credit, I can go get the money. I don't have to talk to anybody. I just fill out the little form and they just send it.
Th
They don't
Thank you. Have a good day. Transfer the money in your online banking, and you're off and running.
exactly. And so I learned that hard money really meant it's secured against the asset, not against you as a borrower. It doesn't mean that they're hard-nosed or they're hard to deal with. So that was a misconception I had with hard money. Learning to really rely on them to guide me through that process of helping me find the true after repair value and the current value of that house really kept me out of a couple of bad deals that I might have done in my early days because didn't really know enough about running my numbers. How can you speak to that with a credit union about getting some of that guidance with the local real estate market if somebody wants to go flip their first couple of houses and not get themselves into a situation where they just went and borrowed against an unsecured line and they don't really know what they're doing.
Yeah, credit unions, I think credit unions are extremely friendly,
Mhm.
and we're gonna say, "We're gonna do everything we can to get you that money." When you're starting out in the real estate or if you're borrowing that money unsecured, you have to realize the friendly place will eventually say, "Oh, give me my money back." Like, we want that back. Where the hard money lender has an invested option. The hard money lender wants to be in and out in a very short period of time. They're not giving you that money for that long-term relationship talking about your retirement. They're gonna give it to you, charge a good interest rate, and do that, so they wanna make sure they're on the hook because these lenders generally aren't federally regulated. Sometimes they're lending out their personal money,
Mhm.
sometimes they're borrowing money to lend out and making it up in the difference, so there's a lot of a higher risk on the line. When you're talking about a multi-billion dollar financial institution, if you don't pay us back, it hurts. We want it to work out, but you're not going to sink the institution. The
Mhm.
hard money lenders are generally smaller institutions where a couple deals go south and they're out of business. So that's why it's a high risk, high reward industry for them as well versus a larger credit union who can diversify that risk and make it happen.
Yeah, definitely. Since we've started doing hard money loans ourselves, we've definitely seen a lot of what you're talking about, which is that we are using private investor capital to make those hard money loans out to our real estate clubs of the people like in the local area. We have a much tighter area that we lend in because we want to make sure that we can evaluate those properties, that we can go visit the properties. If for whatever reason we have to take the property over, we can look at it. So our borrower network is much smaller than you would see in a larger credit union because we are basically experts at our little farm and we're not willing to step outside of that. And so borrowers may have more options. Hey,
Yeah, if I called you and wanted a hard money loan where I live in the middle of
mhm,
nowhere, that's not the place to do it.
mhm. Nope,
There's not a steady market there. It's a very small, limited number of buyers and sellers and investors out here. So
definitely. And that's what we've seen, but it allowed those credit unions, like you said, some of them have a very narrow membership criteria or they're narrow geographically and allows them to really function in that niche and specialize in that niche. But what I like about we also have national hard money lenders, right, who will lend
yes.
anywhere in the country. And so being able to get up with a service provider who can really help you with what you're doing is really important. We're looking at this. So pros and cons of each. One of the other things I've noticed that with the con of credit unions and why we, for some of our deals, have been working with national banks is one, when our ownership structure starts to get a lot more complicated and we have double multi-layer LLCs with holding companies and things like that, or we'll have our holding company in one state and our other LLC for the property management side is in a different state. And I'll go to open up an account and the credit unions are like, "Well, you gotta register as a foreign entity," or it's gonna take how many weeks to sign it, where you send around ownership cards and have everybody sign. And so we have found that as we've been pushed to a few national banks, that can just get it you just go in the same day, open. Not even all national banks can do that. We know which ones are gonna be easier to work with to get these complicated ownership structures opened, quickly. But one thing I noticed is when I started using the app on some of those national banks is that they tend to be better. They're less clunky, definitely have more you can see there's more money behind the user interface design. So that was one thing that I never really thought about before because I really only ever used credit unions all growing up and for my personal uses. And I noticed that my own credit union recently has released their app and it's much, much better. And so can you speak to us about the user friendliness of the experience, both with online banking and in-person banking?
Yeah, sure. One of the pieces where credit unions and your average credit union today is about 250 million in asset.
Mhm.
So they're not going to spend millions of dollars developing, designing, putting out their own app. What I've really seen is credit unions, they're in the middle when it comes to technology and systems. Businesses in real estate lending are a great example of that. Many many credit unions are low-cost providers.
Mhm.
When you have your checking accounts with you're not gonna get charged the fee. You're gonna say, "Wow, that was great, and it was cheap and easy." As you get more sophisticated, you can't live and manage your business like that. You need more sophisticated apps, you need more sophisticated cash management tools, you need wire tools. We're definitely getting better as an industry. For example, credit unions formed tons of business lending CUSOs like myself to bring we were lending at the peak of the market. We were a couple years ago, we were lending 50 some $1 billion of commercial loans a year. And just recently that we formed a CUSO, there's a CUSO formed to focus on business deposit tools 20 years later. So we're seeing a lot of people in credit unions invest in that. And there are definitely some winners and losers with regards to the cash management tools that are out there. Some are phenomenal, but you have to hunt and peck a little bit more for those. Usually you see it more from the bigger credit unions as opposed to maybe the one or two branch community credit unions where you can go in and you could talk to the CEO about your loan and what you're doing, and you're going to have great access. But sometimes your technology that you have might be just a little behind the times, but it is getting better as costs come down and make it more accessible for a mid-sized financial institution.
Yeah, one thing I've noticed since I have so many credit union memberships that I'm starting to see the same tool when I'll log in. It's just like the shared branching system. When I log in, I'm like, oh, yeah, they just must have adopted or bought into this system because it's now identical to what I'm using for the HELOC management on a property at a different credit union. And so that's been interesting to see. Again, like you said, that collaboration, because a lot of them are smaller organizations, but you do have some pretty large
Yes.
national, federal types of credit unions who have more resources and they're able to pool those and make that technology a lot better. And I have definitely noticed over the last even 5 years that gap, like you said, is
Yeah,
starting.
it was very big, but it's squeezing down. And really, as these become more accessible and costs become more accessible, and also as the industry, that technology industry matures a little bit.
Mhm.
Usually, what happens in banking software systems is there's 100 companies that out there all touting their product, and then you have a few winners who take over, and it becomes more reliable and everybody sort of transfers to the winners.
Yeah, it's like the Google of a credit union.
Exactly. Yeah, it's a great example. Everybody there was 1,000 search engines and now there's 4.
Exactly. Yeah, I remember when we first started, Google didn't even exist. We used like Metacrawler and Dogpile, and we were looking at all search engines, and people were talking about investing in them, and we were trying to pick which one we wanted to go with. Google didn't even exist at that time. And so you see, like you said, people rising to the top, learning from what other people are doing, iterating on that, improving it. Yeah, and I've seen that definitely come a long way since we've started using credit unions for less of just our personal stuff and really using them as partners to grow our business. Some of it you are going to pay with some inconvenience for the best rates, like the cheapest product. And other times we choose to put a value on some of the experiences that we've had in the past and go a different direction. And so it's just really nice that we have those options in front of us that a lot of people aren't even considering, and a lot of loan brokers aren't even considering. If your loan broker is not bringing you options from credit union in their basket when they're presenting loan options to you, you need to ask them, where are those guys? If you're, I guess that's your job is get that word out to even the loan brokers so they can start bringing those forward a little bit more.
Yeah, absolutely. And sometimes you have a quality loan broker will bring you a broad base, particularly in some of the small business communities. The loan brokers are going to drive where they're going to get the highest commission.
Mhm.
And you got to really make sure the person that you're bringing it will bring you the best deal where they can get fairly compensated,
Yeah.
but not bringing you just where they're going to get the most money.
Okay. Yeah, and that's a good thing to bear in mind. One of the things we do on the show is not just talk about real estate investing, it's also to talk about how to improve people's businesses who have decided I have a couple rental houses or I don't want any real estate. I'm going to really focus on my business and I don't want to hold anything. I'm going to invest 100% passively. It's one thing is just like how can you run your business better? And so the small business lending side of what's going on in the credit union, it's helped me in my real estate business, but even if you don't have a real estate business, there's a lot going on with credit unions to help entrepreneurs to build their company, whether it has a real estate component to it or not.
Well, and the cheapest and easiest money always is gonna be out there is under the consumer side.
Mhm.
And you found that out there when they put you in a home equity product. And so if you can't if you the your cheapest money is always financing it yourself,
Yeah.
and you can but eventually you can't be the bank anymore. And then people tend to go to some friends and family, and then they can look at some of those consumer products. The money that you get under the commercial side tends to be it's a much more arduous process. It is getting more and more automated every year, but it can be an arduous process, but also can give you high dollar amounts and some of the best are at very fair, reasonable terms. There's a reason why we charge many times a third of the prices of the hard money lenders because we can spend more time on due diligence. We have a different cost structure, different goals, and a different timeline of when we want our money back.
Mhm.
People tend to think everybody who lends money, even among banks and credit unions, is the same. And it'd be like shopping at a restaurant where you expect everybody to sell you McDonald's burgers. Lenders are different. People are different. And you really have to find somebody that fits your goals and where you're going as a business and not just think of, oh, this person turned me down. But sometimes it's you just weren't shopping at the right places.
Mhm. Yeah, and one thing that we've seen is that the more regulated the type of loan, like to take a residential mortgage for an owner-occupied home, it's gonna be a little bit more similar across lenders because of so many regulations. But as it becomes more unregulated into the larger commercial product, I see a wide array. Sometimes I'm looking at it like, how are these term sheets even for the same building? Because the loan products are so different and the terms behind them, like you said, prepayment penalty, yield maintenance, personal guarantee or not, like, there's a huge variety in commercial lending.
Many times, particularly when you're on the newer side, people don't realize you do not have the consumer protection laws do not apply to you, and it is buyer beware. You're out there on your own many times, and the law says that you're a sophisticated purchaser and you are negotiating this one on one, and you can negotiate terms and deals. But when you get into signing the loan document, you should be if your lender, whoever it may be, won't give you a chance to review ahead of time your terms, conditions, because there's no protections. When you get your 30-year Fannie Mae residential mortgage, you can sign everything without reading it because the world is much more protected and standardized, and they can't just throw you a curveball. Under the commercial side and this investment side, what I think we do is generally pretty fair, especially when you get outside of the regulated institutions. It's buyer beware, and you better know what you're signing before you sign it.
Yeah, and the loan, I don't think a lot of people understand, passive investors, but sometimes not even active investors, the loan levers have the largest impact on the returns of the project and is the largest risk to foreclosure because obviously, the only person who could foreclose on the property is the tax authority and the lender. And so if that loan is not sound, that's what takes businesses out of commission. And so being aware of how important that loan is and how important your broker and your lending partners are to having a relationship of trust. And lenders can be notoriously, and so I think the worst thing that's ever happened to us with the credit union loan, once they gave us a term sheet, was when interest rates were just skyrocketing. Our interest rate went up a little bit and the LTV went down, but they still showed up at the closing table with money. I'm never worried with their credit union if they're actually gonna show up or pull out at the last minute. And this happened again and again. People have to go raise another $1 million a week before closing, and they're just going crazy because their lender fell through. And the other thing that I've noticed is that when we have any kind of construction loan, some of these smaller lenders withholding those draws when their liquidity dries up and they're making lots of excuses about why they're not able to pay out that draw and, oh, we need more pictures, or we need different release. And credit unions just tend to be more reliable when they say they're going to do it. It gets
It
done.
in the past 18 months to 2 years, I have told people the questions you shouldn't ask are rates, terms, conditions. It's, are you lending today? Do you
Mhm.
have money to lend? Because you used to always assume you could just call up a lender and they're sitting there with a stack of cash to lend you. That is not the case anymore.
Yep, yep. Yeah, and when a bank is not lending, there's, "Oh, nobody's lending because they're scared." I feel like when we're talking to some of the smaller lenders on some of the projects, they're scared not because the economy is weird, they're scared because their liquidity position is so eroded that they don't know what they're gonna do. They're like, "Oh, why would a bank negotiate with you? Why would they foreclose and take that property back?" They don't want those properties back. They're foreclosing because they can't negotiate because their liquidity position, especially some of the smaller lenders, is so dire that they really cannot afford a forbearance or whatever. They'll some of them have just been talking about BK. It's been a situation where going with some more reputable or more reliable lenders has saved some properties for us and some of our colleagues as things get a little crazy out there in the finance world.
Yeah, really the amount of inflation and capital available. I think it was probably later 2023 is when it was worse. It was
Mhm.
at the worst. We follow the trends and we have keep in mind we have access to credit union balance sheets daily.
Okay.
It is definitely more we are very close and just a little bit under the 10-year averages for at a credit union.
Fair.
We're a little bit under, but not that much. But credit unions also have tremendous liquidity sources backing them up with lines of credit that they can get at very cheap and reasonable prices. It's part of who they are. So yeah, we have seen that across the board and lenders who lend to lenders, the wholesale lenders, they've been the most impacted because the wholesale lenders, they've been absolutely retrenching and focusing on their core businesses. People lend to lenders as a secondary line of business.
Right.
That has really tightened up. And what it caused a lot of that was the increases in the interest rates and so many financial institutions bet wrong. You saw this with Silicon Valley Bank, where they went under because they bought the safest investments in the world. Many people bought mortgage backed securities as their investments. Many people bought treasury rates, which are incredibly underwater now because if they were to sell them, they have to sell them at current market conditions and they would take a huge loss. So rather than that, people just held on to their investments in the lending world and did not sell them and aren't selling them. So they're really just waiting until the natural cycles and payoffs occur.
Yeah. Yeah. It's been crazy out there for sure. And I've seen a lot of pain over the last year and a half when we attend, especially the larger national conferences. Real estate investors tend to be the most positive people I've ever been around. It's almost like a cult sometimes, like the cult of toxic positivity. You really have to keep your head screwed on straight to not get caught up in that tide of, but there's abundance and everybody's going to get rich, right? But the tone has been very different the last year and a half with the issues with construction draws and things like foreclosures or defaults, receivership, things like this that people are dealing with and some of the smaller lenders have been struggling with. So it's been actually really nice lender credit union loan that they just keep producing and reliably servicing these loans and haven't been really a worry for us.
Yeah, that's been the nice part of us. Liquidity has impacted us and everybody. You can't help but it impact everybody, but not to the extent of some other segment.
Yeah. I feel like that you tend to just be more conservative in your underwriting, which sometimes can be a con if you need to work fast or it's annoying because you have to do your whole portfolio. But we tend to be more conservative overall, which puts you in a little safer place when things like what have been going on the last 18 months are going on. So definitely something that people should be looking at a little harder and asking their broker how they factor that in with the loan options that they're looking at. Because we have found tremendous benefit in our smaller business. When we first got started, credit unions were huge and they continued to play a role even as we've scaled. And you mentioned before we started recording that you'll do extremely small balance loans. And that's been a problem for me. One of my first rental houses I wanted to buy, I couldn't find a loan on it because nobody would do, I think it was like $70,000 or something. Out of like
Yeah.
some house out in the Midwest. And I ended up not buying the house because I couldn't find a small balance loan. And then in commercial small balance loans, when they're $5 million are really difficult to source, but you also do huge loans on large properties. And so you seem to have a wider
W
variety of amounts.
I really enjoy what I do because we can help fill an entire life cycle of the real estate investors. And it's somebody who wants some part-time additional investments in their first 1 or 2. I live in a remote area and I have credit unions that will lend in this area, and naturally those properties are much lower.
Mhm.
So credit unions, there's today, I think there's about 4,800 credit unions in America. So they're really covering every small town and corner that there is. So when you say, I have a $100,000 loan in Erie, Pennsylvania, and when you call Erie Federal Credit Union, they say, great,
Yeah.
let's every nick and cranny of this country has just about a credit union there who likes you, who they're not looking down on your outside marketplace.
Yeah. I don't think it occurred to me at the time that I should have gone to like Indianapolis, a small business credit union. Not that exists, but something like that was more of a local bank because they probably could have covered that loan for me. Instead, I looked at a couple national, broker options, couldn't find anything, and walked away from what I thought was a pretty decent deal. It's because it didn't occur to me that I should check with somebody who liked that area and liked lending in that area because that was their farm, so to speak. So I always ask everybody who comes on the show, and you had some really great comments at the beginning about some of your lifestyle aspirations and goals, where you're going from here. You mentioned remote work being able to free you up so that you're saving that commute time, even though the income itself that you're generating from your business is not passive. It probably feels a lot more passive because you ditched the commute. Then you made a comment about how you had to figure out this commercial lending side of things, how you're being entrepreneurial, you're always been more entrepreneurial, you had to figure it out as an employee. And I think that sometimes at the time that you were an employee and now as a CEO, more of an entrepreneur role, we forget that we can still be using that creativity at work. There's like a negativity towards W-2 employees right now because entrepreneurs are the new rock stars and all this kind of stuff. But forgetting that interesting and rewarding projects as an employee can be seen as very entrepreneurial almost within your business unit. And so it seems like you've been able to take that full cycle, those early experiences that you had, and then bring that into what you're doing now. Can you talk to us a little bit about what your life is looking like now, where your goals are going, how you're able to scratch that creativity itch in what you're doing, and being able to make your work center more around your goals, desires, and lifestyle rather than just keeping the lights on and trying to get all the bills paid?
Yeah, sure. Yeah, I really believe growing up in a rough blue collar town, I believe everybody should have access to fair and transparent financing to meet your goals. And that should be in every corner of this country and this world. I really love what I do, but I also have a passion for working with community development credit unions who are looking to some of those underserved communities, those micro level businesses, revitalizing the Rust Belt towns and the
Mhm.
places across this country. When we do a $20 million loan, it's very good to the company and it's very profitable. It's probably just as much work to do some of
Oh,
those bigger deals as it is the
almost
smaller
identical.
deals. But as I move on in life, and I got about another 8 to 9 years in me in my, I'll call my corporate life and my real job. But even today, I really enjoy putting time for the small businesses communities, the underserved communities, and putting revitalize. And that's my passion.
I remember when COVID first hit, and I would have my whole school of kids in the background on these, Zoom calls and things like that, and for the first time in my life, nobody cared. I had spent years trying to run and hide in closets, 'cause I'm on the phone and my homeschool kids are coming in, and we actually had, like, little hand signals that we would use to communicate, like, "Is this an emergency, or can you wait 1 minute while I get off the call?" And then COVID hit, and the kids are, like,
Yeah.
in the call with me, and everybody's like, "Oh, great." And it hasn't gone back. I've just noticed, like, with the advent of remote work, the kids in the background, dogs in the background, all this kind of stuff, like, real life, and I feel like it's helped me connect better with not just my podcast guests, but with my colleagues, with our potential
Yep.
investors. We're seeing into each other's personal lives a little bit more. Yeah, definitely. Okay, so you were talking about the community revival, that you're doing, and I find that a lot of people, as they're like you said, you have 8 to 10 years of your corporate life left, usually start really thinking about paying it forward to underserved communities, whether it's through philanthropy or through, economic empowerment. And it's a dream that a lot of people have, but they don't feel like they can really act on it because they're so tied up with the 80-hour-a-week career, but being able to use your actual career as a way to give back and not have to go outside of that seems like the best of both worlds.
Yeah, there's really a national organization for community development credit unions. There's actually a world organization for community credit unions. So there's so many places across this country and world that need help. Well, sometimes we make wealthy people wealthier and get people who have good, stable jobs. But there's so many people in this country that want to get that step up that might just not have the opportunity. So that's what I really enjoy putting my time into.
Yeah, definitely. And I do some volunteering outside of my fund management organization. But as we're bringing in charities that people could invest in charities, like it's a deal in our fund, or being able to take on affordable housing projects and things like that, like being able to bring that into your job, definitely two birds with one stone and makes your job a lot more fulfilling and creatively stimulating, just like you were mentioning when you're trying to figure out a new product or a new department or a new division. So I appreciate you sharing that with us because I think a lot of our investors are feeling some sort of a pressure as they're going for financial freedom that they shouldn't be working for somebody else. No, stop spending, trading your time for money and all that. I just think that it's a toxic message out there as people are trying to figure out what direction they want to go to say, okay, I have some money to invest for my job. I'm going to do that. Or I want to be a small business owner with a real estate component, or even not a real estate component. I'm going to reach out and Mark's going to walk you through the process on those lending options. And so you've cracked open a wide spectrum of things and ways that people can participate, either totally passive all the way to being the CEO of their own company. So I appreciate you kind of shedding some light on some things that people may not have known about their options.
Oh, thank you.
I appreciate you coming on today. How can people get a hold of you so that they can chat with you about some of their options with lending, business, or real estate?
Sure. Our website is mbfs.org. And also, I'm very active on LinkedIn and get a lot of connections on there and very responsive. And really, what we like to do is if somebody reaches out to us and we don't have a credit union in your community, there's other people like us. There's local credit unions where we do a nice handoff and get you some local access to some commercial financing.
Yeah, that networking is powerful. That's one of the reasons we do this podcast is because we want people to reach out. And if they reach out and I or you don't know somebody that we can't help them directly, we usually know somebody who can. Or 6 degrees will push you down the line to make sure that we hook you up with the right resource. People call me with all sorts of wacky projects that I might not be able to fund, but I'm like, actually, I know somebody who does something similar to that. So, like you said, just being able to have that access and that networking is probably the most powerful tool that we can bring into this arena. So I appreciate you sharing that. Make sure that if you want to get in touch with Mark, I know you've been on lots of other podcasts, and one tip I can share with the listener is when I first started listening to podcasts, instead of just listening, like binge watching a show like this with many different guests and listening to me, blah, 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 in your ear for an hour or more at a time, I would do a search for like Mark Ritter on the podcast app, and it would pull up lots of different shows where I was listening more to the guest talking over and over. So I know you guest on a lot of other podcasts. Is that the best way people can find more of your episodes?
Yeah, and it's also we have every show that I've been on markritter.com too, and we have them linked up on there. And I like to put on the show when the family's in the car, I like to put them on just to see how long before they scream and make me turn them off.
Thanks so much, Mark, for coming in and just sharing a little bit of that passive income dream and figuring out how we're going to make it happen because, it's got to get financed. So if you want to get in touch with Mark, markritter.com. You want to get in touch with me, investwithemma.com. Go straight to my calendar. Whether you want to be a passive investor and invest in our fund, we do hard money and private equity. So we're the other part of the other people's money. When we're funding deal, the lender comes in and then we provide part of that down payment or most of that down payment. Love to work with retail investors, family people who are looking to get their money to work for them, diversify into some real estate assets. And so they're not just having everything in the stock market or 401k. Would love to have a conversation with you about that. Mark would love to talk to you if you aren't needing anything on the lending side, and definitely we'll be furthering the connection because it sounds like that you have a lot of connections to a lot of resources that could be useful to us in our business as we expand as well. So thank you so much for coming on the show.
Thank you, Emma.
All right. And until next time, tell us all about your passive income adventures. We're looking forward to hearing from you.